A few weeks ago I talked about the best currencies in the world, which you can check out here and here. I mentioned the Swiss franc, and hello to our Swiss friends. It's a currency which is well known for being a very strong currency, a safe haven in a way, something which you would hold the same way as you would hold gold. How about if we take an investor perspective? How is the Swiss franc doing? So I decided to dig deeper and look since 1st of January 2000 until the end of 2021 about the performance of the Swiss franc as an asset to invest in, and we're doing that also with regards to the US dollar. US dollar, Swiss franc, who is the winner of the boxing match? Let's find out. My name is Greg Jalbert. I'm a life and personal finance coach. I share what I know about personal finance and coaching on a cup of coffee to help you live a life of purpose and building up your wealth. Round one, pure cash. A lot of people just believe that cash is just the hardest asset. That's the minimum that you should have. It's something that you can trust. I don't totally agree with that, but let's assume for a minute that cash is king. Let's imagine we're on the 1st of January 2000 and we are recovering from the biggest party of the last century, and we magically have 10,000 US dollars that we can keep in cash for the next 21 years. And we're going to keep this cash whether in US dollar or in Swiss franc. Based on that idea, you can see the evolution of the Swiss franc versus the US dollar from 1st of January 2000 to 31st of December 2021. That's not a pretty picture for the US dollar. 10,000 US dollar in 2000 was converted to 16,565 Swiss francs. On January 1st, 2022, we converted back into US dollar to compare with the original investment of 10,000 US dollar, and we get 17,287 US dollar. Oh dear, the Swiss franc definitely win the first round. Additionally, over this period, the CPI, which is a consumer price index, it's a measure of inflation, increased by 10% in Switzerland. In the US, the CPI rose by 62.7%. Considering that the US and Switzerland are two rich countries, we can assume that they are consuming the same type of good, the same type of luxury good or normal good. So the 10,000 US dollars that we have in the US would have devalued to a purchasing power of 6,146 US dollar compared to 2000. The 17,287 Swiss francs have devalued to 15,715 Swiss francs, which translated into US dollar is $16,400. 16,000 US dollar versus 6,000 US dollar. If you compare to Swiss franc to US dollar, we know the winner. Round two, sovereign bonds. To do better than cash and without taking much risk at all, we can invest in sovereign bonds of each country. So we would invest in the 10-year treasury bonds of each of the country. Then we see what happens to our 10,000 US dollar in the US and what happens to the Swiss franc 16,565 in Switzerland. We assume buying and selling the bonds every year, so we are riding the evolution of the rate year by year over the 21 years. The bonds are the Federal Reserve bonds in the US, and for Switzerland they are the Swiss National Bank. Our 10,000 US dollar in the US would become 19,908 US dollar by January 1st, 2022, which is almost doubling our investment amount and is a 3.3% yearly increase over the period. If we look at our 16,563 Swiss francs, they would have become 22,498 francs, which is a 36% increase or 1.5% nominal return per year. Meh. So we need to compare it to its dollar equivalent. So we use the exchange rate of January 1st, 2022, which is 0.9582 Swiss franc to the dollar. We then get 23,479 US dollar, which compared to the 10,000 invested originally gives us a 4.1% annual return over the period. Much better. Taking inflation into account, as per the cash calculation, the 19,908 US dollar are effectively devalued to 12,236 US dollar if you had stayed with your money in the US. The 22,498 Swiss franc would have devalued to 20,453 francs, which is the equivalent of 21,345 US dollar. 21,000 US dollar versus 12,000 US dollar, we know the winner again, and that's the Swiss franc. Does this video resonate with you so far, so you know what to do? And do not forget to subscribe and put the notifications on if you want to receive more content like this every week. Also check out the videos from other YouTubers in the description. You can find some more information about the same topic, about exchange rate and the Switzerland economy. Round 3, stock market. If we want to achieve higher returns, we would turn to the stock market instead of just staying with cash or bonds. But let's take a conservative view here. We're going to go with the main indexes of both the US and Switzerland, so we're not taking too much risk. So we'll be taking the biggest company on the New York Stock Exchange and the biggest one on the SIX Swiss Exchange. In the US, we have the Dow Jones Industrial Average Index, which is made of the top 30 companies in the US by market capitalization. For Switzerland, we can take the Swiss Market Index, the SMI, which represents the top 20 companies by market capitalization in Switzerland. $10,000 invested on January 1st, 2000 in the Dow Jones Industrial Average and rebalanced continuously to follow it until January 1st, 2022 would have increased to $32,112, which is more than tripling and an annual return of 5.7%. Not bad. Our 16,565 Swiss francs invested over the same period in the SMI and rebalanced continuously would have increased to 29,552 Swiss francs, which is a 78% increase or 2.8% annual return. Not that great, but we still need to translate that into US dollar to see how that compares. We get $30,841 for 29,552 Swiss franc, which gives a net annual return of 5.5% based on $10,000 invested. Taking inflation into account as per the cash calculations, the $32,000 are effectively devalued to $22,212 if you had stayed with your money in the US. The 29,000 Swiss francs would have devalued to about 27,000 Swiss francs, which is equivalent of $28,037. $28,000 on the Swiss perspective versus 22,000 on the US perspective. We have a clear winner. If we take inflation into account, then the Swiss franc is a winner. If we do not, then marginally it's the US dollar. And the winner is? Let's take a look at a summary of the 3 rounds. Round 1, staying in cash goes to the Swiss franc by a wide margin. Round 2, investment with sovereign bonds of the respective countries goes to the Swiss franc. Round 3, investment in core companies of the US or Switzerland goes marginally to investment in the US without inflation, and clearly to the Swiss franc with inflation. So the conclusion here is a matter of risk perspective. If you want to take little risk, then the Swiss franc wins for sure. If you want to take a bit more risk, the US dollar is winning, but just by a small margin. Overall, I would say that the Swiss franc wins. The future. Let's take a look at our imperfect crystal ball. We're basically looking at 3 things. The quality of the returns on bonds on one side, on the stock market on the other side, and the evolution of the exchange rate between the Swiss franc and the US dollar in the next 10 to 20 years. So there's probably not going to be that much surprise on the bond side. The interest rate is probably going to follow some parallel evolution between the Swiss franc and the US dollar, with a differential of about 2 to 3 percentage points in favor of the US dollar, because inflation in Switzerland is always lower than what we see in the US. So there is an advantage for the US with regard to bonds. Regarding stocks, the US stock market is much more interesting in terms of the number of companies that you see and the vibrancy of the market, simply because there are a lot more companies coming in and out of the indexes in the US versus Switzerland. The Swiss stock market has a lot of its market capitalization that depends on few companies which have been there for a very long time, household names like Nestle, Novartis, Roche. It makes it more boring, but also more predictable. So the trump card here is parameter number 3, which is the exchange rate. The Swiss National Bank has a loose policy in terms of printing money, and the reason is that a lot of people in the world would like to have Swiss francs. So there is more demand than there is supply if they are not printing money. And for economic reasons, they do not want the Swiss franc to become too strong. It's already appreciated quite a lot over the past 20 years. And the Swiss National Bank gets a lot of foreign currencies in exchange of the Swiss francs, which they use to actually buy foreign assets, a lot of assets everywhere in the world, particularly companies. And that allows the Swiss franc to be very strong in terms of the backing that it has in terms of real assets. Also keep in mind that the Swiss sovereign debt is about 42% of its GDP, which is very low for a developed economy like Switzerland. So the Swiss currency is backed by very hard asset, and there is a lot of dry powders that the Swiss National Bank can use because they have a low ratio of debt compared to GDP. And on paper, the USD is really in a lot of trouble, even if right now it doesn't look like that because it's very strong. There are 2 main factors to consider. Is one, the US debt stands at 127% of its GDP, and also a lot of the money that has been printed in the past 20 years, let's say, has been more and more dedicated to create economic growth, which means that economic growth depends on the printing of money, but that can't last forever. All in all, and it's not financial advice, if I would have $10,000 right now to invest, I would invest some of it in Swiss franc. And I would do it through equities actually, because the profile of equities for Switzerland is actually not very risky. So it's a funny thing to consider is that equities in Switzerland are much closer to, let's say, a sovereign bond in another country, which means that if you were planning to have bonds, in a way I would say, okay, let's put some money in Switzerland in equities because that's a good replacement. It's actually a better return with a very solid currency. So that doubled a bit like gold at the same time. So that's it for the Swiss franc versus the US dollar, and we have a clear winner. If you're more interested in this type of currency comparison, I did one about the Indian rupee and the US dollars that you can check out here and here. I hope that this short comparison has proven useful to you, and I look forward to seeing you next week to talk more about personal finance and coaching on a cup of coffee.